Okay, the topic of my presentation is related to something slightly different. That's my basically interest is taxation, and usually or most of the time talking about business taxation. But today I would like to concentrate on taxing labor because those people who receive salaries, who receive wages, and are working on contracts are also an important part of taxpayers. And I selected just one country, but I will place some international comparisons in my presentation. I selected Germany because Germany and Belgium are in Europe the countries with the highest taxes on labor. Yeah, and I would like to examine who is really heavily taxed in those countries. And I will start with Germany and then develop further research with other countries of the European Union. So what are the purposes of my presentation? I would like to look at the factors that are affecting tax burden. And tax burden on labor is usually expressed by using effective tax rate. I would like to compare effective tax rates in different member states and also examine effective tax rates in Germany for different groups of taxpayers. What is this effective tax rate? It's a very simple relation. So you take just tax to be paid and divide by tax base, and you receive a much more accurate indicator of the actual tax burden than the statutory tax rate that is included in the tax scale. And analysis of this effective tax rate, when you compare the effective tax rate for different groups of taxpayers, may lead to a conclusion: is a tax system supporting redistribution? So it is a tax system that supports the poor or the tax system that supports the rich people in a society. So what factors are affecting effective tax rate? Not only on labor, but on other factors as well. So, of course, exemptions. For instance, if you can have some income exempt from tax, that is reducing your burden. Like you are receiving alimonies, you are receiving scholarships, and you are not taxed, and that is not taxed, then of course your general tax burden will be reduced. Deduction of cost. In certain countries, you have an idea, like for instance, in the United States, that you can take a standard deduction and a grade of itemized deduction. And that means that you can deduct a lump sum of costs that you are incurring, or you can deduct the real cost, actual cost that you are incurring. And in some countries, you are allowed to do this, like in the US or Germany. But in other countries, like in Poland, there are some restrictions, and you can only deduct some lump sum of costs. And that is also affecting the burden. Then, of course, tax allowances, and in different countries, different amounts of expenses of taxpayers can be deducted. The second factor, tax scale and tax rates. And the third factor that is affecting effective tax rate are tax credits. And in some countries, certain credits are refundable. In other countries, they are not refundable. So that's a huge diversity. Most countries allow deduction as a tax allowance for special expenses. In Germany, they have extraordinary expenses. That is very unique solution, and I will look briefly at that difference. Special expenses that are, for instance, some tax reliefs. When you are investing in your education. In some countries, you can deduct it. In other countries, you can't. In Germany, you can deduct a certain amount from your income before taxation. Of course, you can deduct certain other taxes like the church tax. You can deduct donations, contributions to the statutory pension schemes or private pension schemes, mandatory contributions to health, accident, liability insurance. And if you look across Europe and across the globe, you will see that there are huge differences in those special expenses that you can deduct as a taxpayer. In Germany, they have a concept of extraordinary expenses. So if a taxpayer is in a unique situation because, for instance, he is ill, he is undergoing the process of divorce, he has a disabled child, he is able to deduct expenses related to that unfortunate situation. So the government, to some extent, is participating in expenses incurred by a taxpayer due to those events or this bad situation of a taxpayer. It may be perceived as a positive aspect, but as I mentioned, in Germany, you can deduct that. In other countries, hardly. And then tax rates, and that's a tax rate. Those are tax rates in Germany up to 45%, starting from 14%. And of course, usually there is a comparison between different groups of taxpayers, and those different groups are taken into account on the basis of the status of the taxpayer. Usually what is taken into account the marital status, so are you married or not, number of children, and respective tax allowances. And what I mean by that, because in Germany they have tax classes, and there are 6 tax classes, but for the reason of comparison, I have taken only 3 that are more distinct, so that may be easy to be used to diversify, to indicate how diversified the effective tax rates are. So the first group, first class is single divorced taxpayers or widowed taxpayers. The second is a single parent. So either it's a husband or basically ex-husband or ex-wife with a child. And then married couples with both parents are living in Germany. That's the third class. And in fact, in fact, that's a comparison of the effective tax rates. And the first 3 lines is the general tax burden, not only personal income tax, but also church tax and solidarity surcharge in Germany. And the second, and the 3 lines at the bottom, it's the personal income tax only. And what you can see are huge differences in tax burden between different classes or different groups of taxpayers. The highest tax burden is incurred by the singles. The second line is the tax burden incurred by the single parents, and the third is calculated for the couple, a married couple with 2 children. So definitely lower tax burden in this regard. And then concluding, I will compare two slides. The first slide is indicating tax burden on labor in Europe, and the second slide I will be showing in a minute would be the top statutory personal income tax rate. And the comparison will lead to some extent to a conclusion to what an extent the country cares for redistribution. Of course, this conclusion is not final, so one should take into account that there are many factors affecting those two, the result presented on those 2 slides. But one thing can be perceived, that tax burden on labor in Europe is very high in Germany, in Belgium, and France. And when you look at the second, then those countries are also imposing high statutory personal income tax rates on people that are rich. But if we go back, then, for instance, United Kingdom tax burden on labor is not as high as in other countries. However, if we compare this top statutory personal income tax rate, it is relatively high. So if you are rich in the United Kingdom, you are paying a lot. And if you are rich in Germany, you are paying approximately, not approximately, but you are also paying a lot. But people receiving income from labor that are single are also suffering from a relatively high tax burden. And of course, one should take into account that the first slide indicates the tax burden, including social security contributions, and that those are somehow blurring the picture. And the second one is showing only personal income tax rates. And now concluding briefly, people that receive salaries, that receive wages are quite important group of taxpayers because they constitute almost 90% of personal income taxpayers, and the tax they are paying is now approximately 70% of the whole tax revenue. And taxpayers included in the first class in Germany are really suffering from a very high tax burden. I didn't make comparison for other countries. So that will be probably the fact in other countries as well, that if you are single, your tax burden may be higher, 10 or even more percentage points. And Germany is among the countries together with Belgium, with the highest tax wage on labor in Europe. So it may be discouraging the employers from employing new people, and also affecting the unemployment rate, because this tax wedge is a difference between, or illustrate the difference between the amount you receive gross as an employee and the amount you receive net as an employee. And it's also indicated in the burden imposed on employers in relation to employing new people. So thank you very much for your attention.